If you're trying to get a mortgage, one of the best things you can do to be successful is to know which type of lender to approach. Most of us want to pay as little interest as possible, so that means we're going to work with what are called A lenders. Now, there are three types of A lenders. There's banks, credit unions, and monoline lenders. The first I'll start with are monoline lenders. They tend to have the lowest rates and the most competitive penalties if you break the mortgage for insured business. This means you buy a home typically with less than 20% down, and you're going to live in it, and you pay the CMHC mortgage insurance. They also do insurable business where you do not pay the insurance premium. You put 20% down or more, but you meet the insurer guidelines. And the last thing that they usually do is what are called switches or transfers. So this is when 5-10 years ago you bought a home. Typically speaking, you meet the insurer guidelines, your renewal's coming up. They can sometimes offer the best rates on your renewal. Right now, they are particularly competitive for those that want variable rate mortgages. We're often seeing the major banks give maybe prime minus 0.5% in a best case. These monoline lenders are giving prime minus 1 or better. So there's a pretty big difference here. The drawback to the monoline lenders is they only really do this insured and insurable business, so they can be really picky about the types of lending they'll do and the guidelines they follow. The next is everybody's favorite, the big bank on the corner. So the banks are federally regulated, which means that they have to follow a set series of guidelines. And they all have the same guidelines, but they'll interpret them differently. So one thing that's really important to know is that 2 or 3 banks may decline your file, but the 4th will do it, no problem. So it's really important to make sure that you're working with someone that knows the different lenders and how their policies work, so we can figure out which lender's policies work best for you. This is particularly true for real estate investors and self-employed clients, but can be true in many situations like an aunt providing a gift, using US income in a file. The list goes on and on and on. It's important that you go to the right lender. Now, the benefits to these banks is they generally have a higher degree of flexibility than the monolines. They have self-employed programs, net worth programs, they can do rentals and corporate structures. They have all sorts of products. If you're a new doctor, they can use an income for you even though you're in residency. There's little tricks they do. They tend to also have very flexible products in how they work or operate, like readvanceable mortgages. So as you pay down your mortgage, you have a line of credit that grows and gives you access to what you pay off. This can create a safety net or open up all sorts of investment and tax strategies, which can save you hundreds of thousands of dollars over your life. The drawback to the banks is they are rigid and they want a lot of paperwork. So this ties into the last solution for you, which is credit unions. Now, credit unions tend to have slightly simpler products than the major banks. They tend to have more flexible guidelines than the banks, though, because they are regulated provincially rather than federally. So an example is the stress test. Credit unions do not have to follow the stress test when you're doing their mortgage. They usually will, but if you know the right lenders and how to ask, they can waive it. They can also blur the lines between residential, small business, and commercial lending. So this can create a really high degree of flexibility for more complex clients. And the last thing that they do that's really competitive is construction financing. They tend to specialize in the more creative types of deals, and credit unions typically, in my experience, like to do the more niche business where they can charge a slightly higher interest rate, but have you be super happy to get that slightly higher interest rate because they're doing something the banks won't touch. The drawback to the credit unions is that they're local. So typically speaking, you have to be a local resident of where they service, and they typically want to do business that they feel will benefit the community. So it's important that you approach them with the right language when you're navigating the lending process with a credit union. If you need any help in figuring out which type of lender is going to be the best fit for you, let us know. You can reach us at www.kbmortgages.ca. If there's anything at all I can do to help, just reach out. Even if it's not a mortgage, I'm happy to answer your questions and just to help you move in the right direction. Hope you have a wonderful day.